Hey, what is going on everyone? Welcome back to another YouTube video. My name is Jerome. I'm a full-time Forex trader here in Sydney, Australia, and I'm also an ASFX coach working alongside Austin Silver. In this video, I want to cover a topic that a lot of traders struggle with, and that is taking losses in trading. Now, before we get on with the video, I just want to give a quick announcement to all my new subscribers. Thank you guys so much. I appreciate you guys checking out my content and subscribing to my YouTube channel. And also, I hit 1,000 followers on Instagram. So if you haven't already, please go follow me on Instagram. I'll put my Instagram handle here just below. And I'm also planning on doing a giveaway. So please go follow me on Instagram, check it out. I'll be doing that in the coming weeks just before Christmas. Also, if you haven't already, please subscribe to my YouTube channel. Hit the like button if you like my content, and don't forget to hit that bell icon to get notified with new videos that I release and new content. All right, so how to deal with losing trades. Now, the best way I deal with losing trades is you're gonna have to accept that losses are part of trading. So what I do, and the best kind of practices I kind of wanna discuss in this video, is ways that you can just change your perception and your approach to taking losses and how you deal with them personally and emotionally. So number one is, if you take a loss, treat it as doing the cost of business. As retail traders, we don't really have any overhead expenses. We don't have to commute to work unless you're working at an office or whatever and you're trading in an office. But most retail traders are working from home. We don't have to drive. We don't have to pay for fuel. We don't even need a car, half of us. There's not many expenses to do with trading. If you're treating it like a business, you have to know that in any business model, whatever you do, you're gonna take losses. It's gonna be, weeks, months, or periods where it's gonna be quiet and, you're not gonna make money. So having that mindset and approaching as taking a loss as the cost of doing business is a very good way to kind of not justify a loss, but also just a way to kind of understand that, hey, I'm trading and I'm treating it like a business, so I'm gonna take losses and that's okay. My second tip is know how much risk and how much money you're putting on the table. As traders, understanding risk and knowing risk is very, very important. When you're entering a trade, you should already know where you're entering, where's your stop loss, and where you're gonna be taking targets. The most important thing is knowing where your stop loss is. And when you know where your stop loss is going in your trade, you will know how much you want to risk on that trade. So when that stop loss gets hit, if it gets hit, if the market reverses on you, you will know that you've risked $50 on this trade or $500 on that trade, and you are accepting that risk you're putting on the table. In trading, we don't really have much control of the outcome of what happens in the market. So what we do have control on, and that is if we take the trade and how much we are risking on this setup. That is what we can control, and that's something that we can justify as traders. And we should have systems around how to grade a setup, such as A, B, or C setup, C being a very less probable setup, B being, the more common setup, and A being the best setup that you can have in your trading system. And each of those grades should have different appropriate risk profiles. So maybe on a C setup, you risk anywhere between 0.25% or 0.5%. B setups, you risk maybe 1%, and A setups, you risk 1.5, 2% on that trade. I wouldn't recommend risking more than 2% on any given trade, because risk management is your number one thing as a trader. If you can manage your risk, you'll never blow an account. So knowing where your stop loss goes, knowing what grade the setup is, and what are the probabilities of that setup going in your favor, helps you determine how much risk to put on the table. And if you do get stopped out, if the trade comes and reverses and it takes you out for a loss, you would have acknowledged the risk you put on the table, and it will take away and make it much more emotionally less straining on you because you accepted that risk. The second thing I want to talk about, and this is something I quite often do when I take a trade, is when you put money on a trade, I consider it gone. This is why it's very important to not have any emotional connections with the money you use for trading. Don't be trading your rent money. Don't be trading the money for bills or groceries or your living expenses. Please do not do that. If you're trading with money, you have to be comfortable to lose it, because that is part of the game. Not that we like taking losses, but they are gonna happen. So when I take a trade, I just acknowledge that that money's gone. And if it hits my stop loss, I have no emotional connection to that trade. This is a very good way to approach the markets, because you don't have expectations. We can never control the outcome of the market. We don't know what's gonna happen. Yes, we can do all our technical analysis and we can put all the probabilities into our favor for the outcome of the trade, but at the end of the day, we don't know what the market's gonna do. Acknowledging the risk, acknowledging how much you are putting on that trade, and if you do get stopped out, there's no emotions involved and it is very easy to recover. take the second setup that may present and get involved in a better setup so you can make your money back. The third thing I want to talk about, and that is taking a loss can be very beneficial if you can change your mindset towards taking losses. You learn more from your losses than you do your winning trade. Taking a loss will help you analyze and look at the bigger picture of what happened in that trade, and you can easily learn from it. So taking a win and taking a loss are two totally different scenarios in trading. I know a lot of new traders that even professional traders, that sometimes emotions will always creep in. You can never avoid emotions in trading in general. We are humans, not robots. So when you do take a loss, sometimes it can be impactful. So having different kind of practices and routines from taking a loss, such as being mindful, walking away from the desk for 10-15 minutes, having a break and just reevaluating and catching yourself and catching your emotions before they kind of spiral out and get out of control. The last thing you want to do is take a loss, get all emotional, riled up, and start revenge trading, trying to make your money back, because you're just going to dig yourself a massive hole and it's not going to be good for your trading account. It's not even going to be good for your mental health, because you're going to just keep getting yourself into this bigger and bigger hole, and you're just going to keep making all these mistakes and you're not going to be thinking correctly. So that's why having a routine or a ritual or a scenario, when you take a losing trade, you can kind of catch yourself, do something to just, like I was saying, walk away from the desk, come back, reevaluate, and then with a fresh pair of eyes, look at the market again and see if anything high probability setups are presenting, and it enables you to get back in with a clear level head, not just making stupid decisions, getting back and revenge trading, trying to make your money back. This is why I highly recommend any trader meditating before the trading session, just to kind of get that level head and get your emotional state in a place where you can look at the market with an unbiased opinion. You know, if you're going to take a loss, you're going to accept that risk and you're going to be okay with it. So you can get back, find the next high probable setup, and then move on. Or if you take a winning trade, you're not going to get full of ego and you're not going to get all excited and look for the next best trade because you want to start making more money. It's a never-ending spiral, and that's why taking control of your emotions in trading is so important. So as I was saying previously, that we learn more from our losing trades, and having that perception of not looking at a losing trade as a bad thing, like, oh my God, I just lost a trade, or I lost money in the market. If you're following your trading plan and you have rules and you have a system where you approach the market, if you take a loss and you followed your plan, it is a good trade. Just because you take a loss, it doesn't make you a bad trader. It doesn't make that trade a bad idea. The market just didn't play out as expected. Remember, a trading system is based on an edge that repeats itself in the market more times than not. So it doesn't mean that your edge is gonna play out 100% each and every time. So when you do take a loss in trading, look at it, study it, acknowledge what happened, see where you can improve, and come back the next day 1% better. You know, you don't wanna get caught up on the loss. You don't wanna get all those emotions inside of you. You want to get them out. You want to understand that, hey, this is what happened. How can I look at this losing trade and improve on it the next day? That is the best way of becoming a better trader. At the end of the day, I always say to a lot of traders that trading is very psychology based. It is a lot of how you think and process, and a lot of it to do with trading. The actual element of trading is very, very emotional. That's because we don't know what the outcome of the market's gonna do. We don't know if the market's gonna go up or down or sideways. The best we can do is do our technical analysis, follow our plan, follow our trading plan, our system, and show up every day with consistency, finding those higher probability trade setups, and just always execute on those ideas. Don't let your ego get in the way. Don't let fear or greed get in the way, and all these other emotions that can really impact your trading plan and set you off into a very, very, very bad place in trading. Emotions have no place in trading at all, and you don't want to start letting them creep into your trading plan, because your trading plan has an expectancy of return. You know how that trading plan and your system performs over the long run, and as soon as you put emotions in it, you deteriorate that rate of expectancy, and your rate of return and your profits aren't gonna be as expected. You're gonna slowly bleed out your account because you're gonna be taking losses from making mistakes, getting emotions involved, thinking the market's gonna go higher, being greedy, being fearful, getting FOMO, entering when you shouldn't. There's a whole lot of things in trading that really evolve around emotions that a lot of new traders and even professional traders still get caught up in. So as I was saying before, the best way to do this and the best way to kind of combat these emotions is just to be mindful. Understand that it's gonna happen. You're gonna take losses. Think of it as the cost of doing business. Think of it as, you're paying for new printer ink for your office, you're paying the rent, you're paying, for the car lease. These are things in a business. Think of how a business operates. Apply them to your trading when you take a loss, because in trading, as I was saying before, we have no overheads, we have no expenses. I know I don't, especially because I am doing this as a business now. I have a few little things on the side, but nothing as a full scale. I'm not holding inventory. I don't need a warehouse to store anything. I don't need employees. It's the cost of doing business. When you take a trade, understand the risk you're putting on the table. If you're putting $100, if you're risking $100 on Euro USD long, understand that you could get stopped out and be okay with it. If you followed your plan, you followed your rules, it was a good trade, you can't control the outcome, so it is what it is. There's a reason why 95% of traders fail, and that's because emotions are a part of human life. I hope you guys got some value out of this video. I know it was a quick one. I just wanted to kind of go over the way of how I deal with losses and the best ways to kind of combat and kind of deal with taking a loss in trading. If you got some value from this video, please give it a thumbs up. And if you're not already, please subscribe to my YouTube channel and hit that bell icon so you get notified for any new content. Once again, guys, I'm hosting a giveaway in the next few weeks, so please go check out my Instagram. I'll put my Instagram handle here again. Go check it out, go follow me on Instagram, and I'll keep you up to date with the details. I appreciate your time. Thank you for checking out the video, and I'll see you in the next one.